Chapter 1, Mastering Market Basics and Moving Averages. Introduction. I had my money, I had my friends, I asked for advice. From those friends, I traded in stocks as advised by friends. I first lost money and later my friends. There are no free lunches in life. Equally, there are no easy gains in stock markets either. So while we all take help and advice from others, there is nothing wrong with that. It is important to understand and master yourself the game that you are playing. Markets are like car racing. Can you imagine yourself behind the steering in a fast racing car and WhatsApping your friends and asking them what to do next? You will be gone if you do so sooner rather than later. It is the same in the markets. You need to help yourself and equip yourself. As the popular adage goes, heaven too helps those who help themselves. Wisdom says, learn before you earn. So help yourself by making yourself market reader. You must understand the game and its rules before playing it. In this chapter, we will learn about the different types of market movements and their broad phases. We will also consider the various types of market participants, those market behaviors, results in those phases and moves. We will also get an insight into the modus operandi of economic and business cycles. Once through with these basics, we will introduce you to the first tool in our arsenal, moving averages. Page 26, Market Basics. The two kinds of markets. Stock markets don't always move in expected or desired lines, but then neither does your better half. Well, let's be thankful to them all for giving us enough training in dealing with life's unexpected highs and lows. This experience equips us to handle both surprises and shocks. In short, living with volatility is a fact of everyday life. So too is a daily story of stock market traders. While it remains true that each market day is different from any other, but we can still broadly classify market movements into the following two commonly observed categories: trending markets and ranging or range bound markets. It is important to understand this broad classification. It will help you immensely in making your way through the tickets of the market jungle. Markets are not random and there is a pattern to their moves. Let's see how. Trending markets are characterized by prices that keep moving in one direction for a significant length of time. When the price keeps moving higher, we call it an uptrend, while if the price keeps moving lower, it is called a downtrend. It is an uptrend. Prices move in such a way that every price high is higher than the previous price high, and each price low is also higher than the previous low. And the reverse happens in a downtrend. The price from both lower highs and lower lows in a downtrend. Yes, there will be halts in between the successively higher or successively lower levels. Also, there are periods of retracements, namely temporary periods of price moving in the direction opposite to the trend. Retracement can be minor dips or deeper corrections, but the trend sustains so long as the retracements stay limited and the price resumes its move further in the original direction. As soon as the pullback finds support in the case of an uptrend and resistance in the case of a downtrend. The self-explanatory diagrams in figure 1.1 and the real market charts in figure 1.2 and figure 1.3 will help make this clear. Uptrend, rising highs, initial retracement low, next low, higher low, first high, higher high, downtrend, first pullback here, first low, lower low, falling prices, next pullback, lower high. Uptrend on the left characterized by the price making successively higher tops and higher bottoms with retracements indicated. Downtrend shown on the right with prices making successively lower tops and lower bottoms, again with the intervening pullbacks. Trending up, higher highs and higher lows. Clear case of an uptrend in the chart of Ultra Cement. Each high is higher than the previous high. Each low is also higher than the previous low. Page 28, how to make money in intraday trading. Mindtree trending down, lower highs and lower lows. Mindtree is a clear downtrend. The price goes on forming lower highs and lower lows. All market participants love trending markets. Trending phases provide traders excellent money making opportunities, and it is up to the trader to make the best of a trend by staying with it so long as the trend stays with him. For day traders, staying with the trend may mean holding on to the position for the better part of a day. This should be done only when the charts are showing the strongest signs of a trend day, and not otherwise. Of course, it goes without saying that if the situation starts going against him, the trader should not overstay his welcome. Always remember, adaptation is the key to survival. On the other hand, if everything seems to be working in your favor, then you should not be in any hurry to exit. Most traders underestimate how the really strong moves can overshoot all your targets and can surprise you with more gains than you can imagine. You do not want to later repent about premature exits, so take all precautions and have clear strategies for all situations formulated in your mind in advance. Stay logical, stay on edge, and stay sharp to all